Hello, very good dear subscribers, and welcome to a new video on the channel. Today we have the special monthly video reviewing my portfolio starting from €0 with you. Get ready to discover my October pick. As always, first I would like to analyze a little about the evolution of the YouTube channel and how I see it in a couple of months. As you can see, the evolution during this last month has not been so positive since we grow less than I expected in the daily number of visits, and we have experienced a slight deceleration in daily new subscribers. Wow! This month we have not reached the goal of reaching 1750 subscribers. So for this month the goal will be the same and will be to reach 1750 subscribers. Do you think we will make it? The evolution of the investment made last month has not been good, as it has been down, but in overall the portfolio has performed in a flat way. Hershey and Nike are the worst performers this month with over 5% decrease, while Texas Roadhouse and Comcast are the best performing ones with near 5% upside. The good news is that during this month we have received 3 dividend payments. Specifically €1.70 of Comcast, €3.01 from Vici and €1.14 from Nike. That makes a total of €5.85, which is the highest monthly payment. This month I will add a company that I don't have in my portfolio in order to increase my diversification, and due to the low exposure to the tech sector in this portfolio, I decided to add a new company. That is why this month I am going to compare 4 different companies in the IT consulting industry, such as Accenture and Cognizant, which are companies that pay low dividends but with exceptional growth potential, or companies that have higher dividend yields such as Amdocs or IBM that also is the kings of the industry. In order to better evaluate each section that we are analyzing, I have decided to create a Google Sheets table in which we will place the score obtained by each company, like the previous months. Let's start by checking the dividend safety. Only IBM has a dividend safety below 75, while the other 3 companies have an excellent dividend yield over 90. Regarding dividend yield, as I mentioned before, 2 of them have a dividend yield below 2 and the other 2 over 2% dividend yield. Looking at dividend growth, only Accenture and Amdocs fulfill my requirements about double-digit dividend growth. Continuing with the evolution of the revenue and earnings of each company, IBM is the only one who has had a negative evolution, while the other 3 companies had a very positive evolution during the last decade. Now, if we look at the evolution of free cash flow per share over the last 10 years, Accenture had a very positive evolution again. However, in this case Cognizant and IBM have had less positive evolution, while Amdocs 1 is more positive with some drops in UPS. As I mentioned in my previous videos, I want to make investments in companies that make buybacks. In this case, only Amdocs and Cognizant have a clear buyback program, while the other 2 companies, despite decreasing the amount of shares during the last decade, continue having very similar shares outstanding to 2014. The price/earnings ratio is a good indicator to check whether a company is undervalued or overvalued, in addition to a fair value analysis. Accenture and Cognizant are in line with the 5-year average price-to-earnings ratio, while IBM above them, indicating an overvaluation of their price, and Amdocs below them. Moving on to yield on cost, I decided to do the same experiment as last month. So I obtained the current free cash flow per share values of the 4 companies, assuming a free cash flow payout ratio of 60%, which is the maximum recommended in my opinion. This gives us the dividends that each company would pay if they used 60% of their free cash flow to pay dividends. And taking both the share price 10 years ago and the current price, we obtain the yield on cost if you had bought the share in November 2014 and the current dividend yield. In this case, only Accenture would have an annual compound difference in the dividend yield of around 15%, while Amdocs would be lower at almost 7%. Finally, IBM and Cognizant would obtain the worst results with an annual compound growth of around 3%. Continuing with the total return that each stock has offered during the last 5 years. Here none of the companies outperformed the selected technology S&P 500 ETF, signaling that this industry is not doing as well as other industries. However, 4 companies had obtained a positive total return over the last 5 years. Once we have all the values of the scores obtained, what I will do is multiply the average of all the sections by the score obtained in terms of dividend safety in order to more efficiently adjust the results to its security. Well, as you can see, Amdocs has obtained the highest score due to its attractive price-to-earnings and buyback program that lead Accenture to lose some points. As a result, Amdocs will be our pick of October despite the fact that I will consider Accenture in the near future. Then we enter the Scalable Broker and carry out the operation, looking for the DOX ticker. Remember that I will always try to make a purchase of around €100 so that the commission is less than 1%. Putting 2 shares would be an investment of almost €165. Well, we go on to write down the purchases made in our Google spreadsheet. So I put the date on which I made the purchase, the Amdocs ticker, and finally I have to look at the euro to US dollar exchange rate to have it as a reference. As you can see, it gives me a total of €164.07. Placing the ticker in the first column, it automatically added the number of shares and the average price per share. Additionally, this investment will allow us to reinvest 0.05 shares annually via dividends. As we are already in the month of November, I will move on to the monthly value sheet, and in the month of November 2024 we will write the €2,296.51 that our investments are worth in the market. This month the portfolio made a downside of 0.13%, which is slightly above the 1% that VOL S&P 500 ETF has obtained in the same time period. So this month we overperformed the market. This has been all for today, dear investors. A pleasure, as always, to receive your great support. Remember that these videos are not investment recommendations, and it is necessary for each of you to do your own analysis and consult a financial expert if necessary. If you like the video, don't forget to subscribe, hit the like button and activate the bell so you don't miss any of my interesting videos. Thank you for watching the video, and tell me through the comments what you think my portfolio will look like next month.